Hello, ladies and gentlemen. Good day, and welcome to the show on this Thursday, the 26th of May, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say is, I've told you guys it's a poker game that the Fed's playing, and they're holding their cards. Well, they were anyway, and they got a poker face, and they're sitting there hiking rates, right? Well, guess what? They just blinked. Let's get in there and take a look at how they blinked on all this and just the details, and let's get started. Let's open up the charts right here. Take a look at what's going on. Fed rate hike, pause in September. May make sense, Fed's Bostic says. Atlanta Fed leader supports half-point hikes in June and July. Nothing is off the table depending on incoming data, he adds. So what does all that mean? It means that the Fed's just blinked in all of this, And let's take a look at another article here. Let's get in here and Kyle Bass says that the Fed will start cutting rates. Instead of raising rates, cutting rates in 2023 after the U.S. enters a recession caused by them. They've made this recession. We wouldn't have had this recession. And this whole thing about fighting inflation, it is just a big ruse, and what it's done is it's just bought them a little bit more time by slowing the economy down, by slowing things down, by causing a little bit of disinflation possibly between now and September, by cooling the housing market, by cooling everything down a little bit. It's bought them a little bit of time, but they certainly haven't stopped inflation. And when they have to go back to start cutting rates again, which is what he says will start happening in 2023, possibly even sooner, possibly after September, after they're done raising rates, they're just going to have to cut them again and add more money to the system. They can never stop printing. You know what, guys? Okay, well, we're just going to read a little bit of this real quick. He says, I think we'll have a recession by the end of this year or beginning of next year. I think it's here now. Unfortunately, the Fed's monetary policy just can't change that. Echoing what has now become a consensus view, when just 1 year ago it was reserved for the tinfoil hat conspiracy theorist corners of the interweb, Bass said that thanks to a decade of bad policy, Americans are going to see higher food and energy prices. At the same time, the economy is cooling, which he says the Fed can't control monetary policy, and will lead to a shallow recession by the end of 2022 or beginning of 2023. I think the economy is going to cool off. And this is what gets me. It's going to cool off. It has cooled off. I've never seen an economy fall so fast from grace. It's already cooled off. It says, according to Bass, the Fed will be limited in terms of how high it can raise rates because it started with such a low base, as such a true neutral rate will be impossible. They have to pause hikes around 200 basis points or 2% at the key rate. So, yeah, they're already starting to blink, the Fed, and we already get a good idea when they're planning on stopping all this nonsense. And I've said this nonsense all along. I think in my show the other day, I said it's like a dieter saying I'm never going to eat again. You know they're going to go back to the table. Well, are they going to last a day? They'll be so hungry the next day, they'll be ravenous. And they last one more day. I mean, they're never going to quit eating. They're going to go back to the table again. And that's the way with the Fed, They can't quit this monetary policies of modern monetary theory. Once you're on a Keynesian path, you can never go back. Once you've went into the cockroach motel it's like the Hotel California. You can never leave. Once you've entered into quantitative easing, Japan has proven that. You can never get out of it. And ultimately, with a country, it's going to ultimately, in the end, in a hyperinflation, and the dollar becoming valueless. That's ultimately where we're going with this. And I know it's hard for you guys to get your head around hyperinflation, what it's actually like. Now that you're getting a taste of inflation, a little taste of inflation, right? You have no idea how horrible hyperinflation is. Just how it's inflation on steroids. It's like every day you see prices increasing massively on everything you buy. That's hyperinflation. And another thing I want to say, real quick, before I move into the into the markets here, is they're officially saying now that the power's going to go out. Blackout. That means power's gone, right? And when a blackout lasts 3-4 days, your cell phone doesn't even work anymore. Okay? So we got that. They're officially saying blackouts. Warning of blackouts. And they're officially warning of food shortages. So let me think for a minute. The power's out over a widespread area. Okay? The power, all of a sudden, dunk. Power's dead everywhere. Maybe big cities are in that area. Okay? Let me think about this for a minute. And then all of a sudden you don't have any food either? Isn't that called an isn't that called a SHTF? I mean, what am I missing here, guys? If you got no food and you got no power, isn't the next thing that comes after that is the people start to just go insane and crazy and I mean, I seen a movie years ago. It was called the Trigger Effect, and it made an impression on me. And basically, what the movie was about, I think it was it was about 20 years ago or something. They made the movie. Anyway, what the movie was about was over a widespread area, like 4 states, the power went out and it just didn't come back on. And after the first few days, everything's okay. People are thinking, hey, the power's going to come back on. But after it goes on for a little while, 4 or 5, 6, 7 days, people start to lose it. Because they start to lose hope of it coming back on, and what happens is disorder starts to break out. And, it can take many forms, that disorder. But it's the loss of control of the system. How does this system maintain control? The biggest way is the power grid. People have to stay informed. If people aren't informed, after days pass, they start to wonder what in the hell's going on. They start to take things into their own hands in some cases. And more than some cases, actually, Anyway, so they've already told us. They've already warned us. They said this summer power's going to go out. Now, however, they just haven't said how widespread an area or how long. But I do know one thing. They've decommissioned an awful lot of these coal-fired power plants, and suddenly in the past couple of years. And the thing is they were producing a lot of power is going into the grid. You see, it's the cumulative effect that runs the grid, the power grid, and the power grid's broken into like 2 main sections in the United States and in North America here, and it's the Eastern grid and Western grid. Those are the 2 main parts. I mean, there's other smaller grids connected. I think there's like 5 in total. I think there's the Alaskan grid and the Quebec grid and whatever. But overall, there's 2 main parts to the grid, East and West, in here in North America. And the Eastern grid, I think, is the largest. It's a big grid, the Eastern grid, the eastern half of the grid, and the Texas grid's a grid all on its own, Anyway, if the grid goes down, these grids are interconnected, and it's the sum total of the power plants that produce the power for the grid. Okay? And you start taking these coal-fired plants off, and you're going to have a grid that doesn't have enough juice. It's as simple as that, And they decommissioned a whole bunch of them, so it's probably the reason why we don't have enough juice in our grid. And what's the reason for no food out there? Well, I mean, that's that's pretty obvious too, and it's problems that they created. They're creating, these people in charge are creating all of these problems that could lead to an SHTF ultimately. And then what are they going to do about it to get an STF thing? They're gonna nothing they can do, because it's hard once that happens. Once Humpty Dumpty falls off the wall and he takes a big smacko, how do you put him back together again? How do you restore order over a wide area if you get too big of a wide area where you've lost control, basically? How do you restore order through big? It's not that simple. It's not even that simple to get the grid back up and running again. If the whole thing goes down, to restart it, because it's like a dead short. The grid is like, it consumes so much power to get it up and running. The behemoth of the grid, The grid should have been broken into smaller sections so that they have breakers between each section so that they can just lock off a section and then restart that section real easy. But no, what they did was they interconnected the entire grid, and so if you start pumping power into one part of the grid, it's like getting a dead short because it's so big, The whole thing's a mess. They've created a mess for us. I think we're basically running on borrowed time because of the mess that they've created. In so many parts of the pieces of the system that they've created this mess. Anyway, let's get into the markets now. We're looking at silver price at $21.95, and it's down 2 cents. Let's take a look at gold today. Gold is $18.49. Now, I'm going to tell you what. They are going to create the condition, because they've already basically told you now, in around September, they're going to start pumping the money back into the system. Well, it's game over because everybody's seen the inflation now and they're scared of it. So what do you think they're going to do? There's going to be a rush into gold, silver, and cryptos again. In fact, they might start front-running all this when they get wind of it. If I got wind of it, that they are going to probably end this thing in September, this tightening schedule. Don't you think other people out there in the markets got wind of it too? And don't you think they're going to start saying to themselves, hey, I'm going to front-run this. Why wait, And so we might be seeing bottoms coming pretty soon. We might be already here. We might already be seeing bottoms, like in things like cryptos and things like gold and silver, because if they start front-running it. And I mean, they're really cheap right now. Look at gold and silver, and look, gold's $18.49. It was over $2,000 not that long ago. And silver was over 26 bucks. And has the inflation went away? No, it's got worse. It's got worse. Okay? So, that's where we're going with that. Cryptocurrency today. What we're looking at is 29,112. We might, this is about probably, I'm going to estimate probably they've overshot this bear market by probably about 30%. Quite seriously on crypto. They've taken Bitcoin down. If Bitcoin was gold, pretend Bitcoin's gold, okay? Just for a minute. Now the gold price peaked at 2,000 bucks, more or less, right? And now, so $2,000, and Bitcoin peaked at 68,000. Okay, Bitcoin's under 30,000 now. That's more than a 50% drop. That's about what, a 60% drop? Or more, 65% drop in price? Now, if that happened to gold, and gold's peak was 2,000, that would mean $850 gold. Well, that's where Bitcoin stands right now. So if you saw that big a drop in gold, you'd see $850 gold right now. Would that be a good bargain? $850 gold right now? Well, that's what you're looking at in Bitcoin, percentage-wise of drop from its peak. if you compared it to gold taking this big a hit. And that's why I say I think they've overcooked it by at least 30%. This bear already, you know? And so, yeah, I think it's a great value, I mean, if you like cryptocurrency, which is risky. Crypto's risky. It's more risky. It's a risk asset, much more so than gold and silver. Gold and silver, I look at them as very little risk. They're like buying money, you know? It's great stuff, if you want the safety and where you put your money. And this stuff's not very safe. Cryptos, I mean, it can lose $5,000. You could see 29,000 today and 25,000 tomorrow with it. But on the other side of that coin, it has tremendous upside potential. I mean, you could see $100,000 Bitcoin, and not maybe next year or something. I mean, so it has tremendous upside potential. So that's why I say it's risky. It's a risk-on asset. But we might be going into a risk-on rally in the markets, in the stock market this fall. Maybe the last quarter of this year, if September is when they're going to say, hey, that we're ending all this tightening thing, the Fed, we could see a risk-on rally going into the last quarter, October, November, December of this year in the markets. And real estate could then bounce back too, somewhat, because they're going to have to lower rates again. I mean, you see where all this is going. Anyway, take a look now at the Dow Jones today. It's up 474 points. And so we've got to a point now where investors are only selling the rallies. Things might change pretty soon, especially if they get more wind that the Fed's going to change direction on all this monetary policy and they start to front run it. We might start to see the market shift back in, especially this fall, October, November, December. We might start seeing this market shift back into to buy the dip sort of thing again, which I know all of you guys love. Anyway, let's take a look now at crude oil at 113. And crude oil has been signaling all along that it's inflation all the way. Crude oil's up $3.33 just this one day alone. Considering, there's something that they get out of the ground for free. Basically, they just walked on a piece of soil and they said, hey, there's oil down here. Look, it's gushing out of the ground. Let's just put a pipe in there and tap it. And yeah, let's start filling barrels with it. We get it for free. It just basically pumps out of the ground for practically, it's under pressure and everything. This is when they first came along, and they started pumping us oil. And they're just putting it in barrels for free, basically. And now look what they got the price up to. They got the price up to where it's like you fill your car and it costs you like $100 for something that they get it for free. They're doing the same thing now with water. And I remember when I was younger, you go into a restaurant and you say, oh, I'm thirsty, can I have a glass of water? How much do I owe you for that? Oh, no, it's free, it's free. Not anymore, boys. You walk into a restaurant, you say, oh, I'm thirsty, I need some water. And they say, well, you can have that tap water over there. It's all full. Let me smell it, the guy says. Oh, it smells like bleach. Oh, yeah, we can have that. Or if you want a water that not full of bleach, it's going to cost you $3. What a world we live in. Honest to gosh, who would have ever thunk it? Anyway, move index today, 105.69. Move index is coming down a little bit. Bonds and rates today, what we're looking at is a mixed bag. We're looking at a U.S. 10-year at 2.75 and a U.S. 30-year at 2.99. Let's take a look at the U.S. dollar index. It's at 101.94, and she's going along sideways today. So, thank you guys for listening to my show today. Like and subscribe. You guys have a great afternoon. And listen, hit that notification icon too, the little bell, and click all notifications, because that way they can't anyway they can get notified in all of it. And we'll catch you guys in the next show. Bye-bye.